Hello and welcome. You're watching Business Today TV. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. The August FNO series expiry is here and the Nifty 50 is 300 points down so far and seems set for a first negative FNO series since March. That's in 5 months. And all eyes will now be on the macro data. The quarterly GDP data comes out later this evening. Whether that will provide support for the new series is something we'll track for you. But first up, the top headlines this hour. Indian stocks are likely to remain under selling pressure on the last day of August FNO expiry as flat cues from overseas and weak sentiment across Dalal Street keeps bears on the driver's seat. Bulls retain control on the cash side of the market with beaten down chemicals, pharma, textiles and auto stocks providing enough long side action, negating the listless consolidating phase on the main indices. Very good morning to all our viewers and good morning to you, Shail, as well. Well, all hopes were pinned on the festive cheer, but that also perhaps did not help the markets to maintain the gains that we had been seeing through the large part of trading session yesterday. It was the late hour profit booking that erased most of the gains, and the Nifty did end flat with a positive bias yesterday ahead of the expiry. And again, it was the Nifty that failed to hold the crucial 19,400, 19,500 hurdle. Shail, what are you looking at on the Nifty now?
Good morning, Sakshi, and good morning to all our viewers. We are at the fag end of August's expiry today, it being Thursday, and the fact that the Nifty is down 2.8% in the futures market so far in this month hasn't been, one of the greatest months that we've seen so far. You had rightly mentioned this is going to be the first monthly expiry after 5 months of stunning gains. So between April and July, the Nifty had appreciated 13%. It's given back nearly 3% to the market, as also the Bank Nifty, which has actually surged 20% and given back somewhere like 4% to the market in the month of August. Sakshi, I don't think so there is any trade on the long side in the Nifty, mainly because what is happening is that suddenly shorts get built up. Yesterday's trade was a perfect example. If you see, the Nifty and Bank Nifty opened gap up by 90 and about 250 points respectively, and that gap up was not sustained. At about 2 p.m. you'll just see an intraday chart of the Nifty. It's a 5-minute chart, and you'll see how selling pressure and shorts continuously built up during trade, say somewhere like 2 p.m. kinds, and then the massive fall happened. This is how yesterday's trend panned out. This is Nifty, a 5-minute intraday chart. You see a gap up of 90 points. It sort of continued till 2 p.m. and after that, because of weekly and monthly expiry pressures, this is what happened. So the trade is on the short side at extreme ends, and that's a really difficult thing to take. I mean, it takes great courage to short Nifty after a 90-point rise, but that's what has happened. And similar to Nifty is Bank Nifty. If you see the daily chart, yesterday was pretty bad for both indices because you saw an engulfing pattern, and that engulfing pattern was actually red in color, which basically means that the high and the low, the index ended at day's low, and the difference between the high and low was actually red because the index ended lower, and that sort of encapsulated the previous 2 or 3 days rise. And that is the reason why there is a lot of weakness, Sakshi. There is really, nothing much to say about, except that any rise is likely to be sold. We see some kind of support happening on 19,100, 19,200, but let us see how September pans out, because we've been hopeful all through the month of August, that first the 20 EMA will hold, then the 50 EMA will hold, then the 100 EMA will hold, and we've been sort of how should I say, not been very happy as far as the indices are concerned. But at the same time, I'd like to show you a couple of charts, and I'll request the PCR show the Nifty mid-cap hundreds index, and you'll see what has happened. Basically, the Nifty is down 2.8% in August, Bank Nifty is down 3.8% in August, but the mid-cap Nifty is up almost 5.8%. So there is heavy selling or profit booking on the blue chip side, and very sharp rallies are happening in mid caps. Look at this chart, record high and a 5.8% rise in August alone, 27% rise from the base of April. Similarly, look at the small cap chart, again a 6% rise in the month of August, and a similar 25-26% rise from the base of April. We'll also show you some data on how mid caps have surged in the month of August. Only on F&O, there are stocks that have gone up 30, 25, 50% in 22-23 trading sessions. So what has happened is that mid caps have been ramped up, blue chips have seen a lot of profit booking, and this is not going to continue. There are two things that will happen. One, mid cap remains where it is and blue chips rally to catch up with the lag, or God forbid, mid caps correct and blue chips remain where are. My understanding is that September should see some kind of traction coming into blue chips. Mid caps might consolidate. Sakshi.
Okay, let's pin our hopes on the new series then. But as far as today's session is concerned, on the Nifty Bank, yesterday also the Nifty Bank was bigger disappointment when we compare between the Nifty and the Nifty Bank. The Nifty Bank index fell over 500 points from the day's high to end about 250 points lower. For the entire series, the Nifty Bank is down 1400 points and largely led by disappointment on the HDFC Bank counter yesterday. What are your thoughts today?
Sakshi, again, it's very difficult to stick your neck out. The Nifty Bank is, just look at the daily chart and you'll see a problem there. On the Bank Nifty, the size of the red bar is huge, and it's engulfed Wednesday's trade, Tuesday's trade and Monday's trade. So it's also at the low point of the previous 2-3 days. This is a bearish engulfing pattern, and it's gone below 50 and 20 EMA, and it's closed below that at about 44,232. Bank Nifty is weaker still. The surprising part in Bank Nifty is that amongst the 12 stocks that constitute the Bank Nifty, the strongest is IDFC First Bank, which barely has a weightage. HDFC Bank, ICICI Bank and SBI, these are the highest weightage counters, and if you see the monthly performance, actually SBI is the top loser on the Nifty, down 9%. HDFC Bank is 6.7% lower in the month of August. So it is weakness that is getting rolled over in the September series as far as banks are concerned. So Bank Nifty is actually worse off than Nifty in today's trade. Any rally, any bounce back, I am sure will see sustained selling pressure. Sakshi.
Absolutely. On the F&O space, Shail, we've constantly heard you talk about specific stocks that have been in limelight over the last 5-6 odd trading sessions. The cash stocks, the F&O stocks, these are the ones where all the vibrancy is in the markets. For today, is there a particular sector or some stocks that you would highlight for all our viewers to keep on their watch list?
So Sakshi, both of us live in Delhi, and just try getting a hotel room during G20. It's impossible. The first chart we'll start with is Indian hotels. Rack rates have gone up dramatically. The stock closed at 416 yesterday. This is a record high, and was of course one of the top gainers in trade, 7.4% higher. and this was accompanied by a 10% rise in open interest. Over the next 10 days, Sakshi, till September 15th, you will see hotel stocks rallying very, very sharply. There is a broad theme that prices because of G20 across the board have risen. Will you believe it? There is no hotel room available in a 300-400 kilometer radius of Delhi in any 5-star. So that is the tailwind. Indian hotels record high 417. This rally is likely to continue, and the delivery statistics for Wednesday compared with Tuesday were 9x. That means 9 times more delivery was picked up for Wednesday over Tuesday, and very, very sharp rally, 7.5%, 6% higher, and 10% rise in open interest. So Indian hotels is one of those stocks, apart from other hotel stocks in the cash market, that will really look up for the next 10 odd days. And apart from Indian hotels, look at textiles. Aditya Birla Fashion Retail, 2.7% higher. The daily chart is in front of you, and this will show you a breakout that is happening. This stock has done nothing for the last 5-6 months, and there is a breakout yesterday accompanied by a decent rise in volume. Because there is a tailwind in the textile space, we'll look at Aditya Birla Fashion Retail at about 220 rupees, accompanied by a 12% drop in open interest. So there's short covering happening. And I'll also look at Steel Authority. Again, tailwind coming in from China. A low ticket, high beta item, 91 rupees 30, 3.5% higher. And it's seen a 22% rise in open interest, Sakshi. So these three stocks, tailwinds in Aditya Birla Fashion and Indian hotels, and a high beta, low ticket item in Steel Authority. Sakshi.
Okay, Indian hotels, Aditya Birla Fashion and Steel Authority of India. All of these three stocks we will continue to revisit when the markets hit pre-open in trade as well. But as far as the global handover is concerned, let's look at that as well. The US markets did rally overnight. The S&P 500 advanced for the 4th consecutive day yesterday. It extended its week's gains to 2.5%. On the other hand, the Nasdaq 100 has climbed 3.5% this week so far. We've already seen the Nasdaq make it to the 7th day of gains in the last 8 days, and of course this is largely led by the weakening economic data that perhaps give us the bad news turning good, in a way that there are hopes that the US Fed will not be as hawkish as before. The shares in the Asian markets also followed the Wall Street. They opened higher following the weak economic data, but then turned mixed, especially with the Chinese markets ahead of their crucial data points in trade. August factory activity data is expected, and there is a large expectation that the world's second largest economy is forecast to see the 5th straight month of contraction in manufacturing sector. So that is something that we will watch out for, overhang on the Chinese markets, but the GIFT Nifty has indicated a mild positive start. When we talk about the flows especially, the FII shares, FII sold shares worth about 495 odd crore rupees in yesterday's trading session, while the domestic institutional investors, they purchased 1323 odd crore rupees worth of stocks on August 30th. As far as the Brent crude prices are concerned, they climbed again to nearly $86 a barrel. So that's continuously going to be a watch out for as well. But Shail, how are you looking at the growing disparity between the US markets, the China markets, the economy, how it is shaping up? And today we are also looking at our own GDP, which is a stark contrast. The expectations are that in a year's time, we may actually look at the fastest growing pace for this quarterly growth for India.
So, Sakshi, I am not as intelligent as macroeconomists are. I don't look at any such data. It is completely irrelevant for stock pickers, and in this world where any data point can be twisted beyond belief, it makes no sense to track hundreds of them. It just rots your brain. So just look at the chart and be very happy. Crude oil is all that matters as far as global cues are concerned. Let China deflate, our metals will go up. Let China deflate, more FDI will come into India. just keep your pretty head away from such things. It is more important to read what is right, and those are about 50 to 100 balance sheets in India that can turn you from a normal middle class individual to a very wealthy retired person. Don't spend time on these things, they don't matter at all. Just look at the Nasdaq, that will help you track the Nifty IT, and that's about it. We have built a comparative to you for you, which is the monthly fall that we have seen in all the 4 or 5 major indices in India and the US, and there is a bit of similarity there. If you see the 2% fall on the Sensex and the Nifty, that's been matched exactly by the a 2.5% dip on the US markets. So the Dow is down 2%, the Nifty is down 2%. S&P 500 is down 1.4%. The Sensex is down 2%. The only point I wanted to raise here, Sakshi, was if you look at the small cap fall in the S&P Russell 2000 index, it is 4.6% compared with the 6% rally in the small cap index in India. So you see the dichotomy. Only two things will happen. Market is statistically a mean reversion, which means anything that goes beyond 2 standard deviations will come down, and anything that falls beyond 2 standard deviations will go up, and sometime in the world they will meet. So I am hoping that you will see some profit booking in small caps and mid caps in India, and blue chips will rise. Let us hope that happens, Sakshi.
Absolutely. Okay, we'll just wait for our first guest to join in. In a few seconds or minutes, we will have him. But in the meanwhile, I'll just list out for you a few stocks that you should be keeping on your watch list today. First up, Sula Vineyard. There are reports that Verlin West Asia Private Limited is looking to sell up to 12.56% stake in a company via block deal. So keep Sula Vineyards on your watch list. That stock is something that you should continue to watch out for. The other stock that you should watch out for is BHEL. The company has won an order to set up supercritical thermal power project stage 2 at Lara in Chhattisgarh through International Competitive Building. BHEL, remember this stock has been on an up move. Yesterday 3.5% higher, 118.7. We'll continue to watch out for this one as well. Apart from this, Zen Technologies from the defense space, that stock will be in focus. It's reported that apparently some defense ministry order has come into the company of about 73.2 odd crore rupees. So from the defense pack, Zen Technologies is something we'll watch out for. Let's also look at from the pharma and the healthcare pack, Fortis Healthcare. The report suggests that the company is looking to acquire Meteor Hospital in Manesar for 225 odd crore rupees. So Fortis Healthcare is another stock you should watch out for. Yesterday there was a dip of about 0.8% at 331.9 is where it ended at, but we'll keep an eye out on this one. Ajanta Pharma, that's another stock. Positive news flow for Ajanta Pharma here. It has got final approval from the US FDA for the release of topiramate extended capsules as well. So that's another company that you should watch out for. 1728 is where it ended at, up about 0.2%. From the railway pack, RVNL, that's going to be on our focus list today. The company has emerged lowest L1 bidder for projects worth 256 odd crore rupees from the Maharashtra Metro Rail Corporation. Rail Vikas was up by half odd percent yesterday at 128.5. So we'll watch out for this one as well. These are the top 5-6 stocks that you should keep on your watch list. But let's welcome our guest on the show. Sunny Agarwal now joins in. He's the DVP and Head of Fundamental Desk at SBI Securities. Very good morning to you, Sunny, and thank you so much for taking the time out for this discussion. Tell us, which are the stocks that you are watching out for in today's trading session?
Yeah. Good morning, Sakshi and Shailendra, and good morning to all the viewers. So basically, before directly starting with my stock pick, I would like to give update on market. So what I feel, market is still range bound, and the activity continue to remain stock specific. And again, within stock specific, I feel the area where there is a government capex like railway, defense, shipping companies, or for that matter, new sunrise themes like renewable energy, and all those are in focus as of now. My first stock pick, I mean, the stock on radar is PCBL Philip Carbon Black Limited. The company is into the business of carbon black. They are one of the largest manufacturer of carbon black in India by capacity and seventh largest carbon black producer globally, both by capacity and revenue. At the same time, their customer base is based out of 45 countries. They have got an installed capacity of 6.7 lakh ton per annum. The key growth trigger is the expansion of capacity and the low valuation. So company is likely to expand the capacity by around 1 lakh ton every year and to bridge the demand supply gap. And what I feel is that company is likely to post a profit of around 600 crore in FY24. And at current market cap of 6,500 crore, I feel the company is trading at less than 10 price to earning multiple. At the same time, the return ratios are in the range of 20%, 22%. So what I feel is that it's a good value pick. At the same time, valuations are very comfortable, and one can buy this stock for a price target of 180 to 200 in the time horizon of 6 to 12 months.
Right. If you see the PCBL chart, of course, earlier this was known as Philips Carbon Black, and we've seen a very, very strong breakout in this particular stock day before yesterday. You'll see a huge green bar. This is almost a record high for the stock. We've seen this price somewhere in the month of July, after which it went into a consolidative phase, and it has now broken out. Remember, one interesting thing which Mr. Agarwal really pointed out was that the market capitalization of PCBL is somewhere like 6,400 crores, the revenue being 5,700 crores, price earnings just at 15. So this is a low ticket, high beta item where the financials and the valuations are still in the normal zone, and given the demand that we've seen in mid caps, this could be one of those stocks which could be a part of your portfolio. Of course, this is a medium term pick, and about 180 is the price target that Sunny has on Philips Carbon Black. What else is on your radar, Mr. Agarwal? Are you planning a trip to Delhi and perhaps looking for a hotel room?
So in fact, Shail, I'm avoiding travel to Delhi. As we all know, lot of many VVIPs are going to land in Delhi very soon. So better to stick to Mumbai and enjoy all the events at a comfort of your room. So again, my topic will be to ride this theme, basically G20 meeting, Cricket World Cup, upcoming festive season, or travel, whatever we say. Maybe a wedding season will kick off again post Diwali. So a long runway for all the entire hospitality industry. And again, my topic here is Indian Hotel Limited. So again, I mean, no need to introduce the company, one of the largest hospitality chain in India, with a marquee brand like Taj and Ginger under its fold. And at the same time, the triggers going forward, as we have discussed, a lot of events that are coming up. In terms of profitability, company has posted one of the best ever numbers as far as first quarter results are concerned. And at the same time, during last 2 3 years, we have seen that company has shifted their business model from asset heavy to asset light, and now they are expanding all the most of the adding keys, most of the properties on a management contract basis. And what I feel is that with a lean balance sheet and a robust set of numbers, I feel again it's a good story to add in your long-term portfolio. The current market price is around 415, 416, and I feel over the period of next 6 to 12 months, one can easily see the targets of 480, 500 in the next 6 to 12 months. So there are a lot of events which are playing out, and I feel the entire hospitality industry is going through the demand supply gap. So what we have seen during the last 4 or 5 years, the demand has picked up significantly. At the same time, the supply has shrunk significantly. So I feel the revenue per key or ARR, what we call average room rate, is likely to remain buoyant over the next 2 3 years, and that will benefit the entire hospitality industry. And Indian Hotel, being one of the market leader, is likely to be the key beneficiary of the same.
Absolutely. Everything accepted, and the fact that the best holiday season for India as a tourist destination is the second half of the fiscal year, starting from October to March. That dovetails into our festival season and a series of mega events that are likely to be held in India over the next 6 months or so. And I'll just give you a glimpse of how richly valued Indian Hotels is. Compared with the PE of 15 for Philips Carbon, the PE for Indian Hotels is 56. And if you see the market cap to sales ratio for Indian Hotels, it's somewhere like 10. Market capitalization is 59,000 crores, revenue is 6,000 crores. For PCBL, it was about 1.2. So this is how brands, marquee consumer consumption is valued in the market compared with pure commodity plays. This is not to say that you will not see a rally in PCBL, but it's just that more and more people, more and more investors actually like to see and play the consumption theme. And post-COVID, we've seen a dramatic rise in hotel consumption and vacationing. Such is the state of VIPs in Delhi that I have decided to move to Bombay for 3-4 days because it is impossible to get a hotel room in Delhi. Sakshi.
Absolutely. So, very, very important stocks right here. But Sunny, apart from Indian hotels, is Chalet Hotels and Lemon Tree Hotels also something that you're watching out for? These stocks have also been, stellar performers if we look at the, near past.
Yeah, definitely. Lemon Tree is also one of the key. So entire hotel pack is likely to be the key beneficiary over the next 6 to 12 months. And again, if you ask me which is my second best pick in the hotel industry, again it will be a Lemon Tree Hotel. Because Lemon Tree, what we have seen over the last 3-4 year performance has improved significantly. At the same time, their new property in Bombay is getting a very good response. And what I feel is that gradually, even Lemon Tree is likely to post a very robust set of number over next 2-3 years. So again, Lemon Tree is my second pick, and Chalet, you rightly pointed out, again a very robust portfolio of hotel. So that is also likely to be one of the key beneficiaries. So what will happen is that it's a normal business cycle that whenever their hotel, the larger brands or larger chains are packed or there is no room available, obviously the demand will shift to the second in the line or third in the line. What I feel is that the entire hotel pack will benefit. But again, if somebody want to take a calculated risk reward bet, I think better to stick to top 2-3 brands like Indian Hotel, Lemon, and Chalet, rather than going for a smaller players. Because there one can see that there may be a temporary spurt and then one may get stuck at a higher level. So better to stick to stories where there is an assurance of the profitability or consistent profitability over next 2 to 3 years.
Right. Okay. Sakshi, pre-open trades are in front of us. Nifty is flat as a pancake. 7 points higher, 19,355. Remember, today is the end of a very, very tiring, painful monthly expiry of August. We've seen sell-on rallies happening throughout the month. The Nifty is already down 2.8% so far in August. Now let us see how the day pans out. I'll tell you the stocks that are making a difference on the long side, and it's very hard to find them. 1 second, let me just rustle it up. Yes, HDFC Bank is down about 1%, 1565. There is a downtick in Axis Bank, 0.3% lower, 980. ICICI Bank is in the green, thankfully 0.7% higher at 966. Reliance is flat as it can be, 24.18, and that's perhaps what is significant as far as today's trade is concerned. Nifty is flat, Reliance is flat. It's the end of the expiry, so probably a range bound trade. What else is working in Nifty's favor? Okay, we have Geofin up 5%. Remember, this is the 51st stock in the Nifty, 242.80. Hindalco is looking good, 1.7% higher, 464. We have L&T 0.5% higher, 27.24. SBI 0.5% higher, 569.80. Bajaj Finance in the green. So a bit of tick happening on the upper side, 44 points higher now, 19,391. Let's look at the F&O space. Sakshi, you marked BHEL, top gainer, 2.5% higher, 121.50. Remember, we've had 2 or 3 technical analysts joining us all of last week, marking BHEL on the long side. Yesterday it was also Mileen Vasudev. He mentioned 124, 125, and before that, when it was at about 110, 111, other techies had also marked it on the long side. Indian Hotels opening 2% higher, 425. We are looking at IDFC First Bank 1.25% higher, 93.40. HCL Tech 1.2% higher. These are F&O stocks. Let's look at NSE 500. I just want to see high beta. Uflex was up 20% yesterday. The rally continues, 3% higher, 476.90. Let us just see Coforge 1.7% higher, 53.88. Chalet Hotels 1.5% higher, 550. We'll let these trades settle in the pre-open space. Nifty is now flat again, 11 points in the green, 19,361. And perhaps the right time to welcome Mr. Rajesh Palvia, Head of Technical and Derivatives Research at Axis Securities Limited. Rajesh, good morning. Without further ado, your 2 top picks for today.
So Shailji, we expect that hotel stocks can do well, and Indian hotel is looking very promising. The kind of open interest addition and the breakout on the daily, weekly time frame is clearly indicating that this stock can continue for more upside from the current level. So we are projecting target for Indian hotel towards 430, 435. Keep your stop loss at around 409. And the second stock is from the real estate space. We expect that whole real estate space can do well from the current level also. We have seen a lot of buying traction in last couple of trading session. So from that space, we like Godrej Property. Slow steady movement is taking place now. Stock is comfortably holding above 50-day moving average. This is the 3rd consecutive day where stock is forming higher high-low formation, and clearly stock is in up-sloping channel for the daily time frame. It clearly indicates that this stock is going to continue furthermore momentum on the higher side. So Godrej Property, we are projecting target of 1700. One can buy with stop loss of 1620.
Okay, so we have, 2 of our guests talking positively on Indian hotels. I think everybody is after the hotel space in today's trading session, and we're not getting a single room right there. And of course, from the real estate space, Godrej Properties as well. Which are the ancillaries that, Rajesh, that you're looking at, apart from the hotel, since we're looking at a very, very high demand here in Delhi, and because of G20. If you can hear me, Rajesh, can you hear me? Is my audio clear to you, Rajesh?
Yeah. Can you repeat it?
Yes, absolutely. I was saying that, both of our guests today have picked out Indian hotels as their topic, and we are seeing that, the hotel space is going to be absolutely buzzing. But what in terms of the ancillaries? Heavy demand for the hotels, but what else is going to be on top of the radar when there's so much demand for hotels?
Yeah, so we can look at other stocks like hospitality is one sector. Then we can look at some of the stocks which are related to tourism and travel. So Thomas Cook is another stock where we are focusing. That is from the mid-cap space, and Thomas Cook is also showing the kind of breakout. This stock can also do well in the coming weeks. So that is also on the buying side. One can expect a target of 140, 145 in the continuation of this up move. So that stock one can buy also. MHRIL is also looking very promising. So that stock one can look at. We are projecting target of 444.50 on the positional basis. So one can buy this stock also with stop loss of 375.
Right. Rajesh, good morning. Uh, to you, on you lies the responsibility of highlighting 2 or 3 trades for the month of September, where rollovers are strong, charts show some kind of promise for further rallies, and of course, the underlying mood has to be positive. What looks good to you for the medium term position of, say, 2 months, 3 months, 1 month in the FNO space based on rollover data for August?
So looking at the rollover data as well as the risk to reward, we expect that Pidilite industry is a stock where we are focusing for month of September. Already we have seen throughout the month there was corrective move, but since last couple of days some recovery is taking place and the stock is placed above its 20-day moving average. The kind of reversal we have seen, we expect that Pidilite industry can exhibit furthermore upside in the month of September, and possibly this stock can move further higher towards 2650, 2700. So Pidilite industry is one stock where we are focusing, and the other sector we expect to perform in the month of September, that is chemical basket. And from that space, we like UPL. Risk to reward is very favorable. Stock has already corrected, and since last couple of trading sessions, we have seen consolidation and breakout is already taking place. So we expect that UPL can do well. Stock has already given a breakout of falling channel on the daily chart. So we are projecting target of 640, 660 on the higher side for UPL in the month of September, and one can keep a stop loss of 575.
Correct. Let's draw the chart of Pidilite, the maker of Fevicol and one of the most well-known multi-baggers that have graced the Indian market over the last 25-30 years. What you see is a bounce coming from 200 DMA. The stock at 25.74 in yesterday's trade. If you see the all-time high for the share, it's somewhere like 29.50. So there's a decent margin of safety. Of course, valuations in such counters have always been on the higher side. The other dictum in the market in India is कि महंगी चीज़ हमेशा महंगी होती है और सस्ती चीज़ सस्ती ही रहती है. So Pidilite and of course UPL is what we look for the month of September as far as our friend Rajesh is concerned. Nifty has settled 28 points higher, 19,375 in pre-open. Almost flat on Nifty Bank, 33 points higher, 44,265. The stocks that have settled at the higher band in markets today are Chalet Hotels, 553. Let's look at this stock, and I'll request Mr. Palvia to give a view. Remember, the rally is across the board in hotel stocks. Chalet is already at a record high, and we see an opening tick of 553. Your call, Rajesh.
So a continuation of uptrend is taking place in Chalet Hotel, and the kind of volume action which we have witnessed in last couple of trading sessions, it clearly shows that still buyer interest is there, and the flat pattern breakout is already taken place on the daily chart. So this breakout is clearly indicating that this rally can extend towards 570, 580 also. So those who are holding the long position, they can trail now stop loss towards 535, hold your position, and we expect that this segment is likely to do well in coming trading sessions also. Most of the hotel stocks are doing good. So Chalet Hotel one can hold for target of 580.
revisit the buzzing hotels, tourism space and hospitality sector as we go along. But importantly, we'll also have to keep an eye out on the Adani Group stocks again today. Fresh allegations now emerging. OCCRP has alleged that Mauritius-based opaque funds have invested millions of dollars in Adani stocks, and publicly traded group stocks through Mauritius-based opaque investment funds by partners of promoter family. The Organized Crime and Corruption Reporting Project (OCCRP) has alleged this. The fresh allegations by this organization is funded by the likes of George Soros and Rockefeller Brothers Fund. That comes just months after the Hindenburg research report had come early this year as well. So Adani Group stocks will be in focus. Remember, the Adani Group's response to this is still awaited, and we'll continue to watch out for if the group really responds. Right now, the Adani Enterprises has actually said the group has clarified it rejects all the allegations. As per some reports, I think it's just come in. They are saying that they're rejecting the allegations, fresh allegations made against the group. But in the pre-opening trade, Adani Enterprises trading 2.5% down, 24.49. Adani Green down by almost 4%, 932. Adani Ports also down by 1.8% odd at this point in time, 803 the current level. Adani Power also down by 4.3%. So largely most of the group stocks are down in trade. There are more responses coming in. Adani Group has said that claims are based on closed cases from a decade ago. These are again reports and perhaps coming in from Bloomberg too. Your take, Sunny, on Adani Group stocks. Just when we had thought that the worst is behind and most of the reports were already out, SEBI had also recently submitted its reports in the Supreme Court. The hearing is still awaited. But these fresh allegations, what do they mean for the Adani Group shareholders?
Yeah, definitely negative news for an Adani Group. So one should stay away till the time all this negative news or negative narratives pertaining to all this insider trading and all this get over. But having said that, what we feel is that the certain businesses in Adani Group which are very strong on cash flow side, like Adani Ports, ACC and Ambuja. So basically these 2-3 businesses are the businesses which are on our radar, and one can definitely look at them. So buy on dip is the strategy one can follow. If somebody is a long-term investor, one can look at Adani Port, ACC and Ambuja. But at the same time, one has to keep in mind that it is not till the time all this negativity pertaining to the allegation and all those goes away. I don't think so there is much upside in this pack name also. So let's wait and watch. Let all the negative narrative play out, and then probably at a later stage we can reconsider our investment strategy in Adani Group.
Okay, got that. Rajesh, would you hazard any kind of strategies on trade today on the Adani Group stocks, or would you ask investors to stay away?
I think let the stock to settle.
Sakshi, we'll just start the.
Okay, sure.
We'll start the markets because they've started ticking in, and of course I'll just read the 2 lines from the Adani statement that's come in. We categorically reject these recycled allegations. These news reports appear to be yet another concerted bid by Soros-funded interests supported by a section of the foreign media to revive the meritless Hindenburg report. In fact, this was anticipated as we had reported by media last week. We'll touch upon this a little later. Let's get back to the opening quotes. 14 points higher on the Nifty. Remember, today is the FNO expiry, 19,358. Nifty Bank is in the red, flat now, 7 points higher, 44,223. Let's look at stocks that are driving the Nifty. I want to see what Reliance is doing, and it's flat at 2420. What is HDFC Bank doing? Down 1574, 0.2% in the red. And what is Infosys doing? 0.3% higher, 1440. How about ICICI Bank? 0.5% higher, 964. How about Axis Bank? 984, flat. So this is how high beta, this is how the index setup has opened in terms of how the index heavyweights are placed. Hotel stocks are ticking in front of me like mad. I just want to see what is happening in FNO and what the top gainer is. I see Manappuram Finance 3% higher, 153. Hindustan Copper 2.5% higher, 158.65. I am not able to see what's happening in Indian hotels. No, it's not updating at the moment. Adani stocks, Adani Enterprises 1.85% lower at about 24.65. It's reacting to news and clarifications. We have all the 10 Adani stocks in the red. We have Adani Port at 805, 1.6% lower. Ambuja Cement 1.5% lower, 433. So this is how the markets have opened in the broader sense. Let's look at what's happening in NSE 500. Okay, Geo Finance up 5%, third day in a row, 252.80. Zomato flat at 99.70. RVNL 3.5% higher, 132.50, and Uflex 4% higher, 482. We'll go immediately to Mr. Palvia. Rajesh, any trade for expiry day? Nifty 31 points higher, Nifty Bank 70 points higher. What are you looking at?
So for Nifty, one can look at 19,400 call option as the market has opened on a slightly on the positive side, and looking at the overall data setup, Nifty is holding its ground on the put-based concentration. So till Nifty not breaking below 19,300 level or 19,350 level, we will be having on the buying side of the trade. 19,400 call option is almost trading at 19 rupees. So one can look at this call option for expiry point of view. Keep your stop loss at around 5 rupees, and then possibly if for next 10-15 minutes if we hold that 19,350 level, then one round of short covering we can see in the market, and possibly this call option can move further higher towards 35 to 40 rupees where you can book profits.
Okay, let's look
Correct.
at some more
Nifty.
stocks. Yes, Shail, please continue.
Yes, actually, go on.
So Escorts Kubota was something that I was looking at, the top gainer in the FNO space as well. And apart from this, a lot of auto names are flying away. I wanted to take, Rajesh, your view on Tube Investments, on Escorts Kubota. What are you looking at? The forging names as well. All of these are looking very, very good at this point.
So Sakshi, from automobile, definitely yes, traction is there. So if anyone wants to take some bet on the automobile, so we are bullish on Maruti. Maruti is showing good traction since last couple of trading sessions. So Maruti can be looked at. I think this stock can scale up to the level of 99.50 or 10,000 level also in next couple of trading sessions. So we are having bullish view for Maruti with stop loss of 9,800. And the other stock where we have seen a fresh breakout, that is TVS Motor, very strong price action in last couple of trading session, and the stock managed to give breakout of its multiple supply zone. So looking at the setup for TVS Motor, though valuations are high, but still we believe that kind of buying interest is taking place. We expect that TVS Motor can scale up to the level of 1480, 1500. So one can look at TVS Motor with stop loss of 1400 to be on the long side of trade. As you mentioned about the Tube Investment, so I think Tube Investment one can look at as most of the auto ancillary and all other stocks, related stocks are doing good. So looking at overall setup for Tube Investment, yes, we expect this stock can also exhibit for the more upside, as stock is enjoying buying action since last couple of trading sessions. So we can see a target of around 2950 to 3000 in the continuation of this up move, and hold your long position with stop loss of 2800.
Okay, let's also look at BHEL. Remember, there was news flow as well. The company's won an order, and the stock is among the top gainers in the FNO space as well, and also the top gainer. Let's talk about BHEL now. This stock has been on an uptrend in the last few trading sessions too. Rajesh, what would you say on BHEL at the current levels? Is it still a buy at 121, 2.2% higher right now? We've seen the last 5 days move, 11.5% surge on BHEL already. Last 1 month's move is 17% odd, and 6 months it has moved up 74%. So very, very strong move on BHEL. Would it still be a buy?
Definitely, because we see generally these kind of behavior in the stock where stock is in ban for the F&O and the stock is rallying. So it clearly shows that there is a clear buying interest in the stock. That's why everybody is buying in the cash segment, and the kind of momentum which we are seeing since last couple of months in the BHL, that clearly shows that the stock is now in new trajectory, and the monthly, weekly across all time frame stock is showing strength. And we expect that one can hold this stock for positional basis also. 140, 145 could be the possible target in the continuation of this uptrend on the positional basis. So hold your long position. Even if you get any opportunity to buy this stock again near to 115, 116, you can add position with stop loss of 110.
Okay, let's get Sunny into the conversation. Anything that catches your fancy, Mr. Agarwal, in the opening trades?
Yeah, so definitely auto is on my radar. So I feel tomorrow and day after we will see a lot of auto companies reporting auto sales number. But despite again, it's the play on upcoming festive season. So we all know that auto dealers are. So yesterday, a few days back, there was an article that auto passenger vehicle dealers are loading up inventory and it's at multi-year high. So we are seeing a 4-month kind of inventory stock up, which all the auto dealers are loading up on, and definitely that will get reflected in the auto sales number. Yeah. So again, my topic here will be.
So Maruti and escorts are what we are looking from the auto side. Maruti and escorts is what we are looking at from the auto side. Sir, just a moment, please. Let's just do market spotting initially. May I request you to just do market spotting initially? We'll just look at the fundamental part of the market in a while after 9:30. So what's really moving in the market as of now? Hotel stocks, Indian hotels 2% higher, 425. We have Lemon Tree 2% higher. Remember, these are all very, very high beta counters. Rajesh, coming to you, any view on Lemon Tree? 1.2%, 1.9% higher, 112.
So whole hotel space is showing good traction. So Lemon Tree is also managed to give breakout of its previous swing high of August itself, and the kind of breakout we are seeing that clearly shows that this stock can also do well. One can buy even at the current market price also, and add if you get any dip. Keep your stop loss of 106, and we expect a positional target for Lemon Tree around 130-35 also. So most of the hotel stocks are showing good traction, and breakout is already there in most of the hotel stocks on the near term, short term setup. So we do believe that this rally can extend further.
Correct. Let's look at the Nifty now at 4 points higher, 19,350. It's already rejected the pivot point of 19,380 and slipping lower. So whatever was the gap up that's been taken up by the bears. Remember, today is the weekly expiry, the monthly expiry. So nothing much is expected on the Nifty. The stocks that are doing very well in trade, Zomato, very high beta, takes out the 100 rupee mark now at 100.80. Birla Soft touching 500. We have Hindustan Copper 163, and we have both the exchanges, MCX at 1675 and the Bombay Stock Exchange now in 4-digit territory. Remember, these are very, very high beta stocks. Your view, Rajesh, on Bombay Stock Exchange, what's happening there?
So stock has shown a decent run up in last couple of weeks, and now stock is in 4-digit. Looking at the weekly chart, stock is now managed to give breakout of its previous swing also. So yes, we can expect further more upside in the stock as sustained buying is taking place. Stock has already given a breakout on daily, weekly time frame. So we do expect that this really can extend towards 1040, 1050 zone also. So I think one should hold their long position trail your stop loss now towards 975, and I think momentum can be continue for the more upside from the current levels of 4 to 5% upside can be seen in the stock in the near term basis also.
Okay. Rajesh, on the railway space, RVNL 131.5, 2.3% higher. What should one do now?
So most of the railway stocks are in uptrend, and we are seeing sustained buying action is taking place. So I think RVNL one should hold their long position as stock is consolidating since last couple of week in a narrow price range. But overall structure on the short to medium term as well as for the long term is on the bullish side. So we expect that once the stock crosses over 140, then another breakout trade will take place in the stock, and then we can see a target of 165, 170. So overall structure is bullish. One can buy and accumulate in this consolidation range. Keep your stop loss at around 132, and we are expecting target of 165 to 170 on the positional basis for RBNL.
Okay. From the mid-cap IT basket, Birla Soft, is that something that you're watching out for? A very strong move, 82% surge in the last 6 months. Today, 1.1% higher.
So this is the one of the stocks where we are seeing, outperformance in mid-cap IT space, and this stock has done well in last couple of months. Stock has recovered from the level of 260 to now 500 zone almost. So the kind of rally which we have witnessed in last couple of months, that is clearly indicating that something is changing in the company's dynamics, and we do believe that the kind of addition throughout the series we have seen on the open interest and the breakout on the near-term chart is clearly indicating that this stock can continue furthermore upside towards 540, 560 also. So hold your position. I think rollover action is also quite promising. So now your stop loss should be around 485. Upside target on positional basis towards 440, 540 and 560.
Right. We'll get Sunny into the conversation. Sunny, Uflex for you. 20% higher yesterday, and there is no let up in demand. Of course, this was beaten down very, very badly. Still up 6% at 493. Before we go to Mr. Palvia on the technical part, what's changed in Uflex over the last 2 days? Is Sunny there? I think Mr. Agarwal has bid us goodbye.
I think we have lost his connection.
Mr. Agarwal is okay. Then it's Mr. Palvia's turn on Uflex. 2 days of continuous gains, and on the daily chart, it is now hit the 200-day moving average. Remember, the all-time high on the stock was somewhere like 805. And till about the earlier part of this week, it was at 375. Mr. Palvia.
Yeah, so very strong buying action throughout the week for Uflex. Almost 31% gain for the current week is taking place for the Uflex. And now stock has managed to give breakout on the its weekly chart. It has managed to give a breakout of its multiple supply zone on the weekly chart. So breakout is clearly indicating that something is changing, trend reversal is taking place. Though stock was in downtrend since last couple of months, but now breakout is clearly there on weekly as well as on the monthly chart. So the breakout is indicating that this rally can extend towards 540, 560 also. So those who have already bought at lower price, they can trail now their stop loss on the higher side towards 475. And this rally can extend towards 540, 550 also.
Okay. Rajesh, if we look at the markets, most of the sectors are now slipping into the red. We only have the small cap 100 index as one of the top gainers. The Nifty IT remains a supportive index for the markets, consumer durables, autos and the mid cap 100 basket. Rest of the sectors have now slipped into the red. Of course, the Adani Group stocks are also trending down. I'll take first your view on the small cap 100 stocks that are buzzing in trade. So let me talk about stocks like Piramal Pharma, for example, that's up in trade. Let's also talk about Angel One, LG Equipments. These are the stocks that are buzzing in trade right now. Any of these stocks that you like from the small cap 100 basket, and then we'll come to the Adani Group stocks.
Piramal Pharma posed this right issue. Yes, again, stock is consolidating in a range only, stuck in range. So 95 to 106 is the range since last couple of weeks for the stock. But looking at the monthly setup, this is the sixth consecutive month where stock is showing strength and sustained buying action is taking place. So consolidation is happening, but we expect that once the stock crosses above 106, then this rally can extend towards 120, 125. Again, in LG equipment, there is a reversal on the daily chart. Now stock is trading above to 20-day moving average. Though stock was in downtrend, but the downsloping trend line breakout is clearly there on the daily setup. So that is a trend reversal sign is there on the stock prices. So if stock now at all hold above 485, then this momentum can extend towards 510, 515, where again we have to review this stock. But hold your position for 510 target. Keep your now stop loss at around 486.
Adani stocks now, what should one do?
See, a lot of news flow is there, so volatility is going to be there, and today's expiry day, a lot of adjustment is going to take place. So I think till the clarity is not coming from both the parties, like and again, Supreme Court verdict is also awaited on this stock. So I think there will be a hangover for most of the Adani Group stock, though most of the stocks have done well in the recent past. So if we talk about the technical setup for Adani Port, so immediate resistance area or major supply area is at around 840. So until the stock not crosses above 840, there won't be any fresh buying action or short covering action will take place. So above 840, stock can do well on the higher side, and then possibly 890, 900 target could be there. But yes, on the downside, 785 is the key level to watch for on the downside. If it breaks below 785, then this supply pressure can extend, and then the stock may slide further towards 740 level also. On Adani Enterprise, almost stock is hovering at its 50-day moving average, which is almost at around 2440 zone. So if stocks breaks below 2440 level in today's trade and settle below to 2440, then there won't be any buying interest, and then maybe furthermore supply can be there around, then stock can slide towards 2360, 2330 zone also. So 2440 is key level to watch for on the downside for today's trade. On the higher side, 2520 is the level where one should keep eye. If it stocks crosses 2520, then short covering action can be there in this stock. Another stock that we like, as we have seen good traction in Ambuja Cement as well as in the ACC in last couple of trading session. So looking at the setup for ACC, 2010 is the key resistance area. If crosses above, then short covering will be there. On the downside, 1940 is the key support area. So I think most of the stocks are trading near to their key important support area. So I think during the day we need to watch out all these levels, whether we hold it or whether we give breakdown below those levels. Right. So then correction will take place.
Right. Sakshi, we'll focus on indices that are in the green and are showing traction on the long side despite the broader weakness in the market. The PCR will draw a chart of the Nifty IT index. This is 0.5% higher at 31,255, and lots of IT stocks are doing pretty well. We'll just see persistent 52.33. Remember, this is a very high beta stock. Sadly, it has a ticket size which is fairly steep, but that is what it is, 0.4% higher at the moment, and we are seeing a dip in open interest, which basically means short covering. I'll again draw your attention, Mr. Palvia, to Birla Soft, and Sakshi, you pointed out really well. At the moment, if you see, Birla Soft has a volume of somewhere like 6,36,000 shares on the NSE. Yesterday's volume for the whole day was 9 lakhs. So the breakout that is happening on price as well as on volume is for everybody to see. This is something that one needs to keep an eye out on, and that is how at the moment we are seeing volumes come up. 6 months 82%, 1 year 56%. That's the return on Birlasoft. The other stocks that have come back in the limelight are from the defense space. All three shipyards are doing very well. We'll see Cochin Shipyard 3% higher, 896. Garden Reach 2.5% higher, 822, and Masdok 1% higher at 1882. The mood has changed for the better after Zen Technologies announced that it had won another order for about 73 crore rupees for its drones. So that is at the moment the setup is, and banks are now coming back. Canara, Kotak, ICICI Bank, and these are a part of the overall broader short covering that is being seen on monthly expiry day. Any of the banks that you prefer in the PSU space, Mr. Palvia?
So our preferred pick would be Canara Bank. Again, after corrective move, yes, 320 is the important support area, and from there stock is again, showing buying interest. So risk to reward is in favor of Canara Bank, and 320 should be your stop loss to take a position in the Canara Bank on the long side. Immediate hurdle for the day is around 332. Once it crosses about 332, then next target for the stock towards 340 also. So I think if banking stocks start recovering, then Canara Bank can show outperformance in coming trading sessions. So we are taking bet on the long side for Canara Bank with stop loss of 320.
Okay, Rajesh, I'll draw your attention to BSC, 5% higher in trade right now, 1016. Breakout seems to be happening here. Please tell us what is the next target that you have. Top gainer on the small cap 100 index too.
Yeah, definitely very strong buying action, and we discussed already. And then our target is 1040, 1050 for the BSC, as there is a fresh buying action is taking place as the stock is now in 4-digit. The looking at the traction on the buying side is clearly showing that 1040, 1050 is the immediate target. Even you can look at the CDSL also, that is also started performing, and there is also breakout on the daily chart of falling channel. So I think if CDSL manages to cross above 1180, then there would be again fresh buying action can be there, and then this stock can also scale up to the level of 1220, 1240 in very short period of time. So CDSL can be also keep on the radar on the buying side.
Okay, very, very strong monthly chart as well, a very strong move there on BSC, and seems like it is going to be hitting the all-time high levels also very, very soon for BSC at this point, 1016 currently. It is already at the 52-week high levels. So we'll continue to watch out for this one too. Rajesh, I wanted to draw your attention to the chemical stocks. Shail has been pointing this out to us over the last 2 or 3 odd trading sessions. Stocks like Deepak Nitrite, GNFC, Tata Chemicals, Aarti Industries. These are the top gainers in the chemical space. Very strong price action. Most of them are also looking at a long build-up happening. How would you really trade some of these chemical names now?
Yes, Sakshi, so there was a good buying interest in most of the chemical, agrochemical, as well as in fertilizer stocks in last couple of trading sessions. And most of the stocks now managed to give breakout on their near-term setup. We expect, yes, some more traction is likely to be there. GNFC has shown a very strong recovery from its recent low of 540 mark, and now stock is comfortably trading at around 600 level. So looking at the recovery and the setup on the daily, weekly time frame, we expect that GNFC is one stock where one can look at possible target on a positional basis towards 640, 650. So one can look at this stock also. Even on the Navin Fluorine, it is also looking very promising. On a weekly chart, there is a clear breakout of last 6-week consolidation, and the breakout is clearly showing that this stock can also move further higher towards 4750, 4750, 4800. So one can look at Navin Fluorine also to buy and hold. keep stop loss of 45.80. The third stock that we like from cash segment, that is Lakshmi Organic, or you can say Lakshmi Chemical, which is also showing good traction since last couple of trading session. Almost during the week, stock managed to gain around 15% with the volume, and the breakout is clearly showing this stock can also move up towards 330, 340. So Lakshmi Organic can be a stock where one can look at to buy, and upside target we are projecting towards 290. Upside target we are projecting 330. Keep a stop loss of 290. And new fresh breakout, which we have seen in the previous session, that is Neogen Chemical. That stock is also showing very good traction, and the kind of breakout which we have seen on the chart, that is clearly showing that now this stock can move further higher towards 2000 mark also. So one can buy Neogen for positional target of 2000. Keep your stop loss at 1675.
Okay, so these are some of the top picks by Rajesh in the chemical space. Keep them in on your radar. Rajesh, we've been discussing the auto basket with you. You did pick out some names there. But what about Maruti Suzuki, the largest car maker? And right now, it's trading at 9907. Is 10,000 on cards? Tomorrow we get the auto sales numbers, and then the festive demand follows. We have a long wedding season also, and a long festive season this year round. What are you looking at on the charts?
So looking at the buying interest throughout the week is clearly showing that, yes, now this time possibly Maruti can be able to give breakout about 10,000 level, and then comfortably I think that this rally can extend beyond 10,000 level also. So yes, one can hold their long position. Strong buying action is taking place in the stock ahead of this monthly numbers for vehicle sales data. So I think one should hold their position and keep now trailing stop loss towards 9,800, and possible immediate target is 10,000. Then if it's crosses 10,000, then next target towards 10,200 also we can see in short period of time. So we are bullish for Maruti.
Right. And these are the couple of stocks that Mr. Palvia is paying attention to. We'd like to show you the Bombay Stock Exchange monthly chart, and the enthusiasm for the stock is unabated. You'll see it in front of you in a short while. Remember, there was a massive sell-off on the Bombay Stock Exchange when the stock split was announced. Of course, it had rallied very sharply before that as well, and it was a 3:1 stock split which came into effect in March of 2022. From then, when the highest price was somewhere like 1100 rupees, post split the stock corrected to 400 rupees in a span of about 13-14 months, and from then on it's rallied from the base of April at 437 to 1020, and with moves like these there is an anticipation that you just might see strong movement again coming back in. Mr. Palvia, one view on Bank of Maharashtra, 39.45, one of the top performers in the PSU banking basket space over the last 2 months or so. I remember a price of 21, we are now at 40.
Series of higher top, higher bottom formation is taking place on the daily, weekly time frame, and stock is sustained above all its important long-term, short-term moving averages. The kind of breakout, almost cup and handle kind of breakout, is already done on the weekly chart. That breakout is clearly showing that this stock can move further higher towards 50 mark also. So hold your long position. Very strong buying action is taking place since last couple of week, monthly, weekly. Every time frame is showing strength on the chart. So 50 is the immediate target where stock can move further, and hold your position with stop loss of 36 rupees, and keep trailing stop loss as stocks is moving further higher.
Okay. Rajesh, let me draw your attention now to Manappuram Finance. A lot of financial names have been doing very well. Shriram Finance and Manappuram Finance, these kind of stocks, even SBFC Finance did show a strong move in yesterday's trading session. Your thoughts on these names? Is this space something that one should continue to track?
So, very strong buying action throughout the week for Manappuram Finance, almost 9% gain for the week. And looking at the near-term, short-term setup, yes, there is a strength on the chart. And we expect that, once the stock crosses above 155, then next target for the stocks towards 170 also we can see in the short period of time. So hold your long position on the Manappuram Finance, and I think this rally can extend in the first week of the September series. So we are bullish. Keep your stop loss at around 148. Shriram Finance is also exhibiting good traction in terms of buying. There is a brief consolidation is taking place, but overall structure is on the bullish side. And we expect that, again, the Shriram Finance can also show good traction in terms of buying, and possible target on a positional basis towards 2000 and 2050. So hold your long position with stop loss of 1860.
Okay, let's look at some more stocks that are looking well. We were discussing the railway space, Rajesh. Ircon International, that stock is also now up 2.6% higher in trade. Is there a trade here that you'd like to recommend?
Definitely. So all railway stocks are in trend, and I think this the is all most of the stocks are showing. This trend is likely to continue further higher, and we are seeing a minor dip, and again buying interest is there on whatever dips we are getting in all these stocks. Ircon is clearly showing outperformance. Series of higher top, higher bottom formation on daily, weekly time frame. Yes, this stock can be looked at for the buying side, and possible upside target we can see towards 125, 130 in the short term. So Ircon is buy with stop loss of 109. Titagarh Wagon is also looking very promising. Some minor dip is there in the stock in last couple of trading session, but again, overall structure for Titagarh Wagon is also on the buying side. So we expect that again this stock will continue its uptrend, and possible target on the higher side towards 820, 840 can be there. So Titagarh Wagon one can look at to buy with stop loss of 720.
Right. Sakshi, we'll look at the Bank Nifty now. Very strong traction coming in, 150 points higher, 44,382. The Nifty is back up in the green, 35 points higher, 19,382. Remember, these are volatile, choppy, shallow swings that are happening on the monthly expiry day. While not much can be read into these, but it's the private sector banking space that's taking it away. Let's look at the pullers and draggers on the Sensex and the Nifty that are prompting this kind of a move. Just give me a moment. Yes, okay. So ICICI Bank at 965 up 0.7% is contributing 10 points to the Nifty. Axis Bank 1% higher, 994, 7 points in the green for the Nifty. Infosys 1441, 0.5% higher, 6 points to the Nifty. Reliance 2421, flat, 5 points to the Nifty. What's causing the Nifty to slip? On a net basis, HDFC Bank, L&T and Asian Paints are the top draggers as far as the index is concerned, but taking it away intraday is of course ICICI Bank, Axis and Infosys. I would have loved to ask Mr. Palvia on Axis Bank, but regulatory strictures prevent him from talking about this particular bank because he's a part of that bank. But we'll go ahead with ICICI Bank as far as Rajesh is concerned. Over to you, Mr. Palvia. What is ICICI Bank telling you on the charts?
So since last couple of weeks, there was some mild profit booking was there in ICICI Bank. Stock was slipped below to 50-day moving average, but again in today's action, again stock is showing strength, and now stock is almost trading near to its 50-day moving average. So if at all stocks manages to hold above 950 level for next couple of trading session, then this pullback can extend towards 980, 990 zone. where again the major supply zone is there for ICICI Bank. So clear uptrend will emerge only above 990 level. At this moment, one can take a contra bet as most of the banking stocks have started recovering from their recent low, and Bank Nifty is also showing traction and holding the ground at 44,000 level. So we do believe that banking stocks can start railing in the September series once this rollover action takes place. 950 should be your stop loss for ICICI Bank. Upside target is 980, 990.
Okay. Um, Rajesh, let's look at Birla Soft again and Tejas Networks as well. These two stocks, Birla Soft, of course, a very strong move. We've discussed this before as well. But the limelight is coming from the mid cap. IT space, Coforge, Persistent, Tanla's platforms, Intellect Design. These all are the stocks that are buzzing in trade. Birla Soft, of course, the better one, 2.8% higher in trade, 507. Your thoughts on this one?
So Birla Soft, though, yes, we are bullish, and I think this stock will continue its outperformance, and possible 545, 60 could be the target on the high side. So Birla Soft is buy. Tejas Network is consolidating since last couple of trading session. I think our stock is almost on a verge of giving breakout on its weekly chart. Flag formation is taking place on the stock prices. So looking at the weekly chart, once the stock crosses above 870 mark, then there would be a breakout trade, and then this stock can move further higher towards 950 or 980 zone also. So one can buy and accumulate Tejas Network and keep your stop loss at around 815. So I think most of the mid cap IT stocks are doing good. Coforge, yes, Coforge is also looking promising. LTI Mindtree is also looking promising. So I think most of the mid cap IT stocks will continue outperformance, and I think this really will extend. OFSS is also looking very promising. Again, on the daily chart, there is a breakout is taking place for OFS. So I think OFS is buy for upside target of 4150, 4180. Keep your stop loss at around 4055.
Right, Sakshi, I think special attention needs to be paid to the IT pack. The index is now 1% higher, 31,378, and every single IT stock in the FNO space is buzzing in the green. I'll tell you, Birla Soft we've discussed too much. 7% higher on open interest. Coforge is 8% higher on open interest. Oracle Financial Services is 6.5% higher on open interest. Strong traction on Infosys, TCS, Persistent, Emphasis. All of them are up in the green with a very, very sharp rise in open interest, anywhere between 2 to 11%. And that's how it is, at least in the FNO space. The record highs that we are seeing are in Persistent, now 5,300, as also in 3 or 4 hotel stocks. Chalet is at a record high, 543. EIH Hotels at record high, 245. Indian Hotels, of course, we've discussed many times. Lemon Tree, record high, 111. So this is where money is chasing both news in the market, very, very strong tailwinds coming in the form of record highs and built up volume pressure. And that is how the month of August is ending. Before we end the show, I'd like to show you a set of graphics that we've created on winning mid caps in the month of August. There are stocks that have appreciated 30%, 17%, 18%, 20%, 50% in the past month, pointing out to the fantastic rally that has come about. These are times of caution. Such rallies don't last, and very often one has seen that such stocks are rising up because of supply that has been choked or controlled. So before you jump in to record highs, before you jump into such smart rallies, here's a request: take a deep breath, check with your financial advisor, check and recheck, and never, never, never buy the entire quantity if you are still wanting to take a position in such heavyweights which have gone up such sharply. Rajesh, would you like to comment on how small caps and mid caps have surged?
Very strong traction in mid cap, small cap space, and I think most of the retail participation is taking place only in this space only, as price movement is very fast. So this attracts most of the retail participant in the market. If you look at the daily delivery data also, a lot of activity on the delivery side is also increasing since last couple of weeks. So I think market has already hit up, and most of the stocks, low quality stocks, are also started moving up. So I think yes, one needs to be cautious before taking any position in the stock. I think due diligence and proper study needs to be there when you are buying mid cap stocks, because always there is a question mark for most of the mid cap and small cap stocks when you buy, because again the low quality is always traps you in this kind of market. So I think one should always focus on the quality stocks. One needs to do some study to understand what kind of profitability they are showing on the quarterly numbers, what kind of business model they are running. So this all basic data point or basic study needs to be done at this juncture, because very strong momentum we have already seen in most of the mid cap, small cap space. So it's time to be cautious, as your large cap space is still consolidating. Your benchmark indices, Nifty, Bank Nifty is in a consolidation range. So I think if at all any corrective move starts further in large cap space or Nifty, Bank Nifty, then there would be a pain coming in mid cap and small cap. So I think it's time to be cautious and do very selective to take any bet on the mid cap space or small cap space.
Okay, well, many thanks then, Rajesh, for sharing with us a number of stock ideas and this trading strategy on so many stocks that we've discussed, and the overall market scenario for the next series too. We'll continue to watch out for all of these stocks that you've mentioned, especially the hotel space that now is getting buzzing. Indian Hotels still up 1.5%, the top pick of both our guests, Sunny and Rajesh, today. And we'll continue to watch out for more momentum. Of course, the Adani Group stocks, they continue to be under pressure. All of them are still down in the red, and we'll continue to revisit them as we do the next show of Market Today too. Many thanks, Shail, for sharing with us all those strategies and the target prices. We've also talked about the Nifty and the Nifty Bank and how one should stay away from them, and in fact talk about the cash stocks which are buzzing the most in trade. Many thanks, Shail, for being with us on the show too. What one should also get ready is for our special series, that's Market Masters, where our market gurus reveal their investment strategies for a winning portfolio. So coming Monday, do join us with Tahir Badshah, President and CIO Invesco Mutual Fund, to get his market insights and in-depth market analysis. You can also send us your queries to us on this number 730-308-0488, and these questions will be taken live.